Hello traders, in this video I want to give you a more technical aspect of trading. We're going to look at some charts and I want to teach you why I firmly believe, and have for many years, why you should be trading 50% retracements. What do they mean? How are they high probability areas to trade from? So today's video is going to be a more chart-based technical trading as opposed to me just giving you content where I'm talking to you around certain subjects around your trading. Why these areas are so important is because these 50% retracement areas act as a very high probability area of the chart, price point of the chart, to trade from. They act as a form of support if you want to buy, or they act as a form of resistance if you want to sell. And it gives you far more opportunities to enter the market rather than waiting for price to come into, let's say, one of your support or resistance lines, your static support or resistance areas. So I have been trading this way now for 13 years, the last 8 years rather, as a professional trader. The first 3 years were woeful. Next 2 years was as a successful trader, and then 8 years now as a professional trader. I just want to make this point before I get into this training for you. Everything that I say on my channel, everything I produce, everything I share with you guys is real world, and it's how myself and my clients approach the markets, our methodology, our mindset, what we do around the way that we approach the markets here at the King of Forex. I just want you to know there's no fluff, there's no regurgitated bullshit. It's just real world price action principles that have always stood the test of time and will continue to stand the test of time, because price is the only thing that you need to know. Once you know how to read the price of the market, then you're halfway there. So having said that, today is going to be a chart-based technical training video based around what the price of the market is telling you. And the price will tell you, it will show its hand. It will tell you what to do. So having said that, guys, let's rip into this training of why you should be trading on every occurrence 50% retracement areas in nice trending markets. Let's rip into the training. Okay, let's look at some examples of how we can use these 50% or more retracement areas as very high probability areas of the chart to trade from. These areas act as another form of support and resistance, of course, depending whether you're in an uptrend or a downtrend. The very first thing that you need to do is find a healthy trending market that's been trending, in my view, for at least 6 months, 6 to 12 months. And of course, you can't find that trading those fast moving lower time frames. You need to move up to the weekly and the daily time frame, get a macro view of the market and which way has the market been trending, if in fact it has, for the last 6 months or so. And what you are looking for is any area of the market where only one side has been in the market. For example, in an uptrend, this is the British pound, Japanese yen. We can see here that this was in a long sustained uptrend. We had a consolidation period all through here and a correctional move. And then from this price point here, the trend resumes back in line with the underlying previous long-term trend. And you're looking for, as I said, you're looking for an area of the market where only one side's showing up. Now, it doesn't have to be a big move. Again, it's any area of the market. So let me show you what I mean. We can see here, we've got this one very dominant bullish candle just here, one single candle. Came to this high, and then price came down to here, and then went higher again. So let me just clear this, and I'll show you what I mean. So we get our Fibo, we go from the low to the high, and we can see that this guy here came down into the 50% area, 50% or more, between the 50 and the 100. The reason why the 50% area is so important, even though it's not a true Fibo level, is because at that point, the market is balanced again. When you see something like this, where only one side is in the market, that's an inefficient market or an imbalanced market. It can't continue. We all know this. It can't continue to go up like that. We need the other side competing. So when it comes down to your 50, the reason the 50 is so important is because that market has reached what you would call equilibrium. It's balanced again. And what happens at that area is very, very telling, because for that reason, the market is efficient. It's giving itself permission to go even higher again, in this case, in an uptrend. And the reason for that is, in this move here, you got just one side in the market, then the sellers came back in, pulled it down to this 50 area or below. That means exactly half the buyers and half the sellers of that move at the 50% area are out of the market. What happens next? If you get your signal, provided you know what your signal is, in line with your trend, then you have a very high probability area of the chart to trade from. Let's have a look at some more examples. So from there to there, price came down into our 50 here, actually down here. So we just continue the process. Where is the next imbalance area? So we'll just get rid of our Fibo. The next imbalance starts where the old one finished. So it came down to here. Where's the next area of the chart where only one side's in the market? You can see here 1, 2, 3 bullish candles all through here. That's imbalance. It can't keep on going up like that. Only one side's in the market. Then, of course, the market corrects. It comes down into your 50 or more. 50 is the minimum. And this indeed is a buy signal here. That makes that market, this particular part of the market, efficient again, giving itself permission to go even higher. Let's keep on looking. Where's our next imbalance area? Here became balanced again, or efficient. It came up to there and came back down. Is that a 50% pullback? Not quite sure. We'll have a look in a minute. And then it came up to there, up to here rather, and then came back down. Let's have a look at this move. So again, we'll just get rid of this Fibo. And we'll start again for the next imbalance area, which was here, because that's where price became efficient again, balanced. It came into 50%. Up to here, it began to go back down. Did it come into 50? No, nowhere near it. So we keep on going. Price came up to this area here, this high, and lo and behold, sold off, came back into our 50% range or zone, acting as support. You don't need to have a horizontal line there necessarily. And then price goes again, goes even higher again. When you see these pullbacks into the 50 or below, 50 is the minimum, you can consider it as the market giving itself to make even higher highs or lower lows, depending on the direction of the trend. Let's have another look. Where is our next imbalance area? So this is where it became balanced again. So the new imbalance area starts from here to here. You can see 1, 2, 3, 4, 5 bullish candles. There's only one side in the market. Price comes back down again. Let's see where it ended up. I'll just delete that one. We'll just put a new one on. This is where it became efficient. Here's the imbalance area. Just the bulls are in the market for these 1, 2, 3, 4, 5 candles. Price came down to 50 or more. Here, right at this guy here. There's your pullback into your range. Remember, 50 or more. It goes up again from here to there. Price well and truly came down to 50%. Let's continue the process. Where's our next imbalance area? From here to here. Again, only one side in the market. And then it sold off, came back down. We know that would be at least 50% pullback. So then the new one starts here, up to here, before it sold off again, came down. We know that would be over 50%. And a nice buy signal, by the way. Then, where's the next move? From there to there, just 2 candles. and then price came back down to what would have been a support line at this stage. So this is where we're at right here. Let's just clear the drawings. I hope you're following along, guys. I'm trying to make it as easy as possible. Where's the next imbalance area? Let's have a look. From here to here, you can see we've got this run. 1, 2, 3, 4, 5, 6 candles. We had a couple of days where the sellers came in, but they didn't do anything. They didn't move the market down. This is an inefficient area. The market can't keep doing that. The other side have to be in the market in numbers. Then it comes down to here. Is that 50% of this move? Let's have a look. Let's put our Fibo on it. We started from here to there, to the high where it begins to drop down again, where it pulls back with the sellers. Yes, it did. Price came into your 50 or more area that acts as support. Then price went back up, came back down, and this would have been a horizontal support line, a static support line back in the day. Price came down, revisited support, and bounced up again. Let's have another look. Where is our next imbalance area? From here, you can see just the buyers are in the market. That's not sustainable. The market can't keep doing that. Then it came down to here. Is this 50% of this imbalance area? Let's have a look. I don't think it is. Let's just get rid of this Fibo. Put a new one on. From here to there, just one side in the market, to where it began to go back down again. Did it come down to 50? Through here? Not really. No, it didn't. So therefore, you keep on moving a Fibonacci. I'll just get rid of this drawing. 1 second. Therefore, you just keep moving your Fibonacci until you find another high where price begins to drop again, to correct. Here. Down to here, there's your 50%. This area between 50 and 100 acts as support without you having to have a horizontal line. What happened then? It just continues. This is why you need a healthy trending market. Very, very predictable. Here's our next imbalance area. From here, just one side's in the market. That's not sustainable. The market has to correct at some point, has to go lower if it's going to go higher. And what happened? Let's just have a look. Let's just get rid of this Fibo. We'll just put a new one on. From here to there, only one side's in the market. And where did price come down to, guys? Right here, your 50%. Beautiful reverse bullish pin bar. So you can see, and this happens in every market, traders. All markets trend, but they don't trend all the time, of course. I'm of the opinion markets trend around 30% of the time. So if you find a healthy trending market, that's your very first step that has had a history of being healthy, nice uptrend or downtrend, then backtest this for yourself, prove this to yourself that these 50% retracement areas are very, very high probability areas to trade from in a nice trending market. And again, the premise behind that is the markets go higher or lower than you think they're going to go if the market is efficient. When price pulls back into your 50% area or below, 50 being the minimum, that is an efficient market. That's the market giving itself permission, as I said before, to go even higher or even lower, depending on whether an uptrend or a downtrend. Let's have a look at this in a downtrend. Okay, let's have a look at these 50% retracements area in a healthy downtrend. This time it's the CAD Swiss franc. Again, on the higher timeframes, on the daily timeframes. This market had been in a long sustained, and still is, downtrend. And then we had this consolidation period all through here. Price broke out of consolidation support, came back up, retested it, very important, flipping support into resistance, and the long-term downtrend resumes. Let's have a look at whether this market became efficient again after this consolidation period. Where is our imbalance area? Where is an area of the chart where just one side showing up? Well, all through here, all very bearish until we get down to here where price begins to rotate up, where the buyers come in, the other side come into the market. Into this area here, is that a 50% or more pullback? Let's have a look. Absolutely, we can see price came into 50 or more, in this case 61.8, and then sold off again. From here down to here, this is where it began to go back up. And we know, we don't even need to measure it. We know this is a 50% retracement or more of this run down through here. So where's our next imbalance area? From here down to here, where the buyers came back in, pushed it back up. Is that 50% of this run? Let's have a look. We'll just get rid of this Fibo, put a new one on. From here, it's actually from here to here, guys. These 3 candles. Doesn't have to be a big run. Any area of the chart where there's only one side participating, and we can see price came back into 50 or more and then sold off from here down to here and then rotated here. Let's just see if that's a 50% pullback. Sorry guys, I'll get that a bit clearer for you. There we go. From here down to here, there's only one side in the market, all very bearish. The buyers did come in for a day or two, but they didn't do anything. And then it hovered around here, and then it came back into your 50, making the market balanced or efficient again. In other words, it's the market, as I said before, giving itself permission because it's efficient to go even lower again. Price always makes historical highs and historical lows if it's an efficient market. Where's our next imbalance area? From here down to here, this run, and then price came up to there. Is that 50% of this move? Let's have a look. I'll just clear this Fibo and we'll put a new one on. Where were we? Here down to here. There it is, 50%. Once again, the market has reached equilibrium. It's balanced. Where's our next sell-off? From there down to here, before price goes back up again. Is this 50% of this move? Let's have a look. Yes, it is. Right here. And next runs down here. We know that's 50%. We don't need, or more. We don't even need to measure it. Again, giving yourself permission to go even lower again. It comes down to this low here. Then we can see, I'll just clear these drawings. I'll get rid of this Fibo. After reaching this low here, now we have this correctional move where price, as I'm talking to you now, has rotated back into what was a previous resistance area through here. And an opportunity to sell off the market if you get a quality sell signal, provided you know what that is, from this area down into these lows somewhere down here. So you can see, guys, you would have caught all this movement all the way through here as it became efficient, all the way until it reached down here, just by trading 50% or more retracement areas without you having to have a horizontal static support or resistance line, which you should have anyway, but you don't need to rely on them. You can confidently rely upon 50% or more pullbacks, again, because that is at that 50% level. This is critical that you understand this. The 50% level is where the market is balanced again. Both sides are competing, meaning it's giving itself permission in a downtrend to go even lower again, or an uptrend even higher again. Very high probability areas to trade from, provided you know what signal you are looking for at those areas. You have trend, you have level. These areas act as a level. These 50% pullback areas certainly act as a level, and you would have your signal. That's all you need to enter the market again in a healthy uptrend or downtrend. Hope you found this little training video helpful, guys. And as always, I'll continue producing content designed to help you become better traders and to reach your full potential as a trader. Bye for now.